Seems to be on. I need to copy the link. Apologies if you're watching it and it's messy. But I need to get the link out and then we can move forward. Doctor. Hey, how are you? Let's talk about it. Let's try to get this thing set up so I can see you all talking. Somebody says something. Trash. Yeah, I want to kind of take a minute and maybe go through some of the outlook that I had posted on our Discord group, and then we can work through the chart, because it may seem like maybe it's not the best, but I actually don't think that this backup was unwarranted, and I don't think that I just don't think much of it, to be honest. There was a sense that this was going to happen, and I continually repeatedly posted in our Discord group lately when AMC started running and it kind of knocked the top here. And make sure that my audio is right. Hold on, let me double check something. Yeah, there we go. All right, that's good. That's what it's supposed to be. Yeah, so working on the assumption that it was probably going to have a pretty big pullback it didn't really faze me that there was this offering that was made. I even not jokingly, I didn't mean it in like a joking way, but I even said, hey, a lot of people are going to say that it's not possible that, we could end up back down at like 85 cents or something ridiculous. Because it does seem ridiculous. It seems too far, right? But we add all these gaps, and there's a lot of them on AMC. There's a gap at about 130, maybe 138, that region, kind of right off of that EMA is what it looks like. I think that's the 200, that's an SMA. This is the 180 EMA, which is what we're sitting on right now. The 200 SMA, we had a gap off of that back in May, and it never filled. And in addition to that, there's also like a micro gap down around, and this is a 4-hour chart, mind you, but there was a micro gap down here around 112 that never filled. So, I mean, you really have quite a bit of space here, and you have to be mindful that anytime you see one of these moves, you want to see it in the context of like a bigger reaction. So one of the things that there's a lot of things that I look at here. Okay. I'm going to do my best to keep this, like, I don't want to just sit here and try to puff myself up, right? I want to keep it as forward thinking as possible, but we do have to look back at what was said before, because like even this particular move could be seen as not just a bottom, but also as like a reaction to a drop. So if you look at the tip top here at 1179 and you go back down, you do like a bearish pull on this Fibonacci, even a 330 mark hit would have just been a 50% retrace. So yeah, I tend to pop on when there's some stress about AMC and our Discord group wants some information, and that's kind of the only reason I'm on right now. And it's hard to explain some things without talking. It's just easier to talk through it. But yeah, even this, you can see the 50% retracement goes to 332. So like if we were to say, yeah, it is weird timing. If we were to say that, hey, this is done, it can't go any lower or whatever, and it's going to retrace right now, even just going to 332, which granted, like this is an important level. Don't get me wrong. For other reasons, like for bullish reasons, it's an important level. It is just a 50% retracement on a big bearish downtrend. So like you have to remember, like, yeah, this stopped in different spots. It's been ridiculously long. Don't get me wrong. It looks pretty good as a creek cross here with support. However, this is like an auto reaction, and an auto reaction doesn't necessarily mean that you're going to get this V-shaped recovery unless it finds support above the previous bottoms. We were just there. It was at 238 up to 246. Specifically 239 was the low and 246, but you have to find support there. So what AMC needed to do, it did not do. And I kept saying it in the Discord group because I was like, you know, every time this thing has jumped a creek, it's not back tested it. It keeps doing this weird wobbly thing. Like right here, we went over this creek, we backed up, and we didn't back test it. This isn't a back test. This is like a halfway attempt at doing kind of a back up. So it went back below. It went back to like this 170 region, which is where we are now. And you can see like coming off that previous top, it's like retesting. It's kind of a weak test because it dips pretty low. I mean, it goes way below this previous top, right? So it's a backup. But then notice when it came back out, there was no back test immediately. Like if this were really strong, it should have looked like this. And I know it's easy to do the shoulda, woulda, coulda game, but again, I'm trying not to like waste too much time with this stuff because it makes it seem like I'm like puffing myself up or something. But there's a reason that like I took note of this when we were talking in the Discord. Was like, I don't know why it didn't come back down. And so if you saw the thumbnail from today, that was posted in our Discord group on June 16th. And the idea was, yeah, maybe it could go up to 2 something, maybe at most like 280s. That number came from looking backward here at like where the drop zone was. So like the reason I specifically told everyone like, hey, if it gets to 280, I'm probably going to just offload some shares and wait to buy back in, was because way back here, this was established as like a temporary support. And if you think about cat ears, you should always think about like that structure as a drop zone, right? Like at some point this lost support. So if it had a support that it was maintaining for a time, especially in this case, it was like very flat. It was really easy to see because like at some point this is gonna, if this loses support, this is gonna be a really critical back test. Like very straightforward. So because this dropped down, like, yeah, it kind of went down a long time, making like a micro version of the chart here. It kept going down, but it never backs up to that level. So this stays in your brain, right? It should stay in your brain as like, you know, if this does come back up, there's gonna be a liquidity test on this level. So where is that level? Well, it was at 280. And so the reason I specifically said, and you can go look it up if you want, but the reason I specifically said, hey, I'm probably gonna sell if it gets above 280 is because this was a level that they had left basically untested. Like again, it's the same thing I'm talking about here. It's the same thing I'm talking about here. Like this should have backed up and retested that creek. When this drops down, there's no like big backup to retest this top. It just doesn't happen. And if you look at this, they even left a gap at like 257 or something, right? So you have this kind of built out liquidity zone right here that never gets tested. This is starting to become like my shtick, like my thing, without even trying. Like the last few years, this has kind of been the I know it sounds weird, but this has been like one of the only reliable things that you can use on AMC. Because this has been largely the pattern. They did the same thing right here. Like this is the exact same thing. Like it is no different. It is identical. And guess what? This is the good news. Okay, and it is good news, is they did much of the same right here as well. Although I think what we're seeing is that this might be becoming something of a ceiling for us, unfortunately, for the future. Because right now, I don't know what's going to happen when we reach this level, but I do know that they didn't ever test it. I do know that this backup never happened. So while some of you are sitting here like, well, this is awful, you know, why would they dilute when it's going up? I'm sitting here like, look, I don't know what was expected, but this is the exact same setup. And it's the same exact setup that they did back here, which is why me, as crazy as I am at times with some of the call outs, and yes, sometimes very wrong, I still look at these and I'm like, yeah, it's the same thing. This is like identical in my brain. Because not only did they create a gap zone here that they just didn't back up to for some reason, right? There was another one up higher around 14. That's where the ledge was. And then they did it again when they dropped down. Does this look familiar? So like here's the original drop zone, right? This is really important because this is how I think honestly, I think it's the best way to frame AMC in terms of these motions. Here's a offering made, not surprisingly, right? And then it drops and you create another gap. So you've got two gaps that were created here. It's no wonder then that this has this massive bleed up because there's this weird like avoidance almost. It's like a pressure buildup of shorts. And so you get these shorts that just go crazy and drive the price. But there's something about the volume back here. When you look at that high volume region right here, this is where I think the shorting begins ultimately. And to be honest, I think this is probably where you're getting the buy up for loaning out shares to some degree. So there is a buy-in here that's happening here, but any kind of buying that's happening is probably so they can loan out shares to short it down. And then guess what? They can buy on the way down on these little blips and sell at the top later. And so really like all of this just points to a bearish scheme to kind of like get you back and reset at the levels that you started at. And now you can start anew, right? And it seems like that's really somewhat elaborate. Like, well, you're saying that they're gonna, some of these positions are gonna be red, sort of. I mean, if I buy 100,000 shares up here, yeah, like they're gonna be red. But if I know that at some point I can loan those out, first of all, and collect money on them, right? Because I'm basically lending them out. I'm making like a passive profit on the way down. I also opened up short positions, you know, and I ultimately probably have even some from up here. So it's like the idea that they'd be losing money on that, it doesn't even faze me. I'm like, yeah, there's no money lost. And they do the same thing right on the micro. So like back here, they create this ledge. These are really important markers. There's like multiple ones. Here's one, and then there's two. There's the two gaps right there. It's the same thing. Like you get this initial gap down from like a high, and then it's like usually the top of that perceived range, I guess you would say, and then there's a secondary gap down. And almost always you're going to return back to that at some point. And this is the fun part, I guess, for us, if you are bullish on it, is that, yeah, there's a bet here that can be made because usually there's a trajectory built in to this original buy-in before the gap. That's kind of a triangulation of sorts. And it's there on almost all of the stocks. Sometimes it's for AMC, it can be a bit of a mess, but like it almost always hits it. You can see back here, like these are the two on the bottom, and you can see, yeah, that's where we were. You remember we had that gap down at like 485 in May of 2024. Some of you remember that. You might have been here. And I remember thinking at the time, 485 is strange because that's where we were in February. And that was where Vanguard had opened up certain short positions. It's like we got to see like a mini version of like this big setup, right? And it not, so again, notwithstanding, we know what happens next. Like obviously it meets itself. So I think there's a underlying liquidity question here about like what's going on really, and whether or not they're going to ever let it run, quote unquote, let it run. Meaning like whether the operator is ever going to flip to be more bullish. I don't know if that's necessarily the right question, so much as it is just what are we observing, right, in the day to day. So like on the macro, on the big picture, yeah, like this drop down is pretty massive, right? But again, like there was some things that were left behind. Like there's this kind of massive gap that's just looming right at 5. It's kind of a taunting gap, but this idea that like we're not back testing and we have yet to back test this region should not surprise you, especially looking at where it is now. You can see where it is now is it's at the 61865 level. You know, as much as people don't want to like talk about like the game being rigged and stuff, or that you can't chart things, it's almost always where it needs to be, right? So like you look at the chart and you're like, that's pretty much exactly where the golden pocket is right now. Well, that's where your gap zone is, folks. It's not complex. Like that's where it is. It's literally like marked off for you, and it's exactly where we did not go back for liquidity. So is that a big bummer? Does that mean we're never going to run? I don't know. But I can tell you right now that this particular cross section, whether I'm right 100% or I'm off a little bit, I don't really care, because what I'm looking at more so than anything else is the flow. And I've had this on the chart in various ways for like so many years now. It's almost frustrating because you're like, yeah, I remember this and it didn't happen. Because at this time, what we wanted back here, of course, was that we wanted it to reverse, go back and check that level, which it didn't do, find the support, and then break out. Now, that's a hard ask. Obviously, that needed to be a lot of different things happening. But yeah, I mean, like, had that happened, would we have the strength to go back up to the top of the range here? And would this have looked like a pretty straightforward, like, oh, that was an accumulation, you know? Yeah, I mean, obviously there's things that were standing in our way, like this massive candle here, which is a sweep to the upside, is then reflected as a sweep to the downside, unfortunately, you know, in kind of a 50-50, if you will, flip. Like we get this really nasty reversion of it, and you get this big S-curve, which is the big danger of every single, you know, we'll call it an M-cross, caddy, or whatever you want to call it. That's the big danger of it. You are seeing some kind of a wave build out, but you're also at risk always of failing. So if the wave build out works, and this becomes what I call the shallow S-curve, which happens, then you have to monitor, of course, whether it's going to make that rebound. This would have been the creek jump, right? And then what we would call like a phase D markup. This didn't happen. We already know that. But the point being is, like, when this starts setting up, this particular level, even though it didn't work out, this particular level doesn't just magically go away. Like this particular pattern, almost always, like we just saw it before over here, it's like this somehow is informing these massive corporations of like potential. And I mean that with a capital P. Like, this is the bullish potential, right? This is where bulls are trying to go. If you think about it in that term, it's really very simple. It's not mind reading. It's not me making up, you know, this is what it looks like after the fact. So easy to do. No, like this is the direction that bulls are trying to go. Like this is kind of the natural build out of support, right? You can see a trajectory building. Why is that trajectory going back up? Because they want to get back to gap zones like here, right? Like, well, we're trying to get back to that gap. Why can't we get back to that gap? That's the bull trap, right? You don't have the ability to sell into the market unless you have a bunch of people buying into the market. So you have to think about things from the point of view of an operator who's trying to see where the bulls want to go, but then ultimately who's going to yank the rug. We can talk all day about whether or not it was inevitable or not, that they were going to do like an offering here, things like that. I can't answer that question. That is mind reading. I don't know. Like, I don't have a crystal ball. Like, I don't know that they're definitely going to do an offering. I do know by means of like the chart that it's very possible, right? Where those offerings take place are going to be these liquidity levels where you have massive amounts of potential for a change of direction. So the reason I almost jokingly said it, but I said, well, it doesn't seem likely that you're going to go back down really low to the ones or something or whatever here. Again, I said it like 2 days ago or something, right before they did the offering. I was like, but hey, they could do an offering and all of a sudden we'd be dumping, and it would be logical because they've established that these levels are where they are, right? This creek also really bothered me. This particular trend, something about this particular trend really stood out to me, because we've seen stuff like this before. And specifically, I'm remembering in August 2022. I don't have a brain for everything in the world. I don't. But I do remember weird things like this. And I remember a lot of these setups because I would sit here for hours and like study them. This particular setup right here is something we've seen before. And we've seen it multiple times. In fact, we saw it in 2024 and we saw it in 2022. In 2024, this particular setup was right here. And what they did was, again, after shorting it down really far, they left these gaps, right? They left these markers. They left a marker way up here at $5, and then they left another marker here at a close of like $4.33. Okay, so we saw this before. So they've done this, again, a number of times. It's not even like hidden at this point. When they come down, they establish this kind of pattern of we're going to bleed down and then we're going to react the distance that we originally bleed down. This isn't always like one-to-one, but I used to do this little thing where I'd say, yeah, this is approximately what the reaction is going to be. And it's usually pretty darn close. And I think what we're seeing visually is we're actually seeing that short covering. I don't think this is actually like a buy-in. I think that this is like a get your attention kind of a reaction. So this get your attention reaction is really just the shorts covering from back here, the sellers who are basically just letting go of their positions. And naturally that creates kind of a channel. So you get this like channel effect because they're not going to want to break out of the trend. So another way to think about this is like, if you don't like this idea of this measurement or you can't find it, another way to think about it is like, we're creating an offset for this channel. And what we want to do is see if that offset matches. And it does, generally speaking. So like you would get this kind of a channeled structure, right? All the way to the bottom of a supposed channel that you forgot about because it hasn't touched it very much at all. So like it doesn't hit this channel very much until all of a sudden it does, right? And so like you get this measured reaction from top of the channel, bottom of the channel, and back to the top. So it just so happens, right, that some of the way this is often measured is like this, where you get this drop down and then they create a little ledge. This ends up being like a liquidity center. And then as this thing progresses, it goes and it pushes against the creek, which is the name of our video today, because this creek push is very, very important. But ultimately, like in 99% of the time for AMC, it does not break that creek when it hits it the first time. And it's very unusual when something like that does happen, if it does break the creek. And arguably, this could have been down here, and this could all just be distributive sweeps, because you can see that gap down right there, right? We know later, looking at it, that this region around 330, which again, not surprisingly, has been very, very important to AMC ever since, and ends up being right near that 0.5 at 332. This area at 330 ends up being a very critical level as well in terms of the breakout, because it's the final top that's made here. You can see the closing candle right there on the 4 hour is right on that creek. And this is ultimately where you get the push out, the back up, and the jump. But before that happened, right, you get this retracement down. And this is really curious to me because normally this is what you expect to see, because normally you would have some kind of a backup, right, to this level. It's not like it can't go without touching it. Obviously, in this case, it doesn't quite make it there. But that's also kind of a red flag, because it's like, why are we not going all the way down? I don't know. But we do get, at least in this particular case, not making a lot of little bars and stuff here, but we do get a liquidity grab, right? So if you were to ignore the up and down rules here and just kind of look at what happened, well, we're going back and we're retesting this floor that was made. This floor that also happens to establish some creek bodies. You know, and I do think probably right there, you can see that wick and this wick right there and right here. These are kind of like, this is like the first red candle before reaction. This is like the last green candle before the drop. Those two do end up creating like an intersection. These are tops over here. So that is a backup to that, you know, that trend, if you will. Again, support, and then it turns into resistance and it drops again. So first support here, resistance, drop. You can see the change up. So when I look at that, I'm like, okay, that makes sense. And then we also have this second phenomenon. So that's like one example. We have this second phenomenon that happened back here a long time ago. And I just remember this one because of something that really stood out to me at the time. In this particular case, you have like a ceiling, right? And there's a liquidity level that's being made. And specifically, it kind of goes back. This is a long-winded thing, right? But it goes back to this original kind of bounce in way back here. And obviously the numbers are different now, but this was January 2022. It was a long time ago. And then it bleeds through it. It's kind of a weakness right there, builds out. This ends up being locally a pretty decent spring, and then it goes a sweep below the floor, and then it goes up way high. Again, I can't stress it enough. It's basically the exact same formula. I mean, this is essentially an identical move to what we see in the big move from 2024. Like, the only difference is that this floor took a lot longer, but if you look at the actual structure of that, it's essentially the exact same thing as this sweep here. It's just, you know, the bars pattern isn't perfect, so what? But the movement itself to go back to the top is the same. And arguably, I always thought this didn't go quite far enough. I thought it should come up a little higher, but it is what it is. That's just what they did. I didn't make it happen, so I can't control the market with bajillions of dollars. But I always thought, like, yeah, it could have come up a little higher. And I think at the time I thought it was going to come up to like 35 or something like that, 36. That's roughly where this was. Maybe even a little higher than that. Anyways, point being, when you go back and you look at this particular move, I'm not trying to make it seem like this is going to be really bearish, but just insulate this move for a second and observe a few things. So this was also a cross up over the top. And I think at the time we were looking at this like, well, it could go, right? But then there was this really nasty sell-off and it went really low. And even going into that earnings, which I guess was, again, August of 2022, I was still pretty bullish on the idea that it was going to come back up because from my point of view, I'm looking at this wave cross and I'm like, no, it just didn't make it there. Like, it didn't go up all the way. Right. And I had done all this kind of weird stuff at the time. I wasn't really into using the S-curve tool for a variety of functions. And specifically, I'm looking at these two marks right here, this one and this one. I also was curious because I knew that Vanguard had opened up a long position back here, which is really strange. Like, they actually had done some buying in this area, and I thought that was really unusual. You'd have to go back in time to see all this stuff, but the theory was that this was a macro wave and it was going to come back up. Well, this obviously didn't go up there. So we were looking at that like, oh, it's done, right? This is the moment of like despair that I believe that we're experiencing right now. Like, I don't think that what we're experiencing is particularly unique. Like, I think it's very similar to what we've seen before. And I do believe that in this case, we're probably more than likely experiencing something like this. And if you want to, you can combine it a little bit with the 2021 bottom, like the big bottom. because again, it didn't check the appropriate boxes like when it left. There were a lot of little tiny levels in here. I don't want to get into like the nitty gritty of it. Okay. But the idea of it being, someone mentioned in Discord like a spring. I think that's a difficult word because a Wyckofian spring is a very specific kind of setup. And you don't just spring from like the middle of a range, for example. That's not a thing. Nor do you spring after trying to enter into a new range. That's not a thing. Unless it's like the phase B top and then it moves back. That could be a phase B top could push technically into like a out of the range. It could push the top, right? And then it could come back down and go through the bottom and then spring all the way back to the top. If you're looking at it in that context, that's fine. But overall, would I call it a spring? No. I would call it a sweep. Like I would call it a way of flushing out weak hands. I would call it a way of going back and rechecking certain liquidity levels. And in this particular setup, there was a couple things. You can see one gap right there. That was pretty obvious, right? That's, again, a gap over the same EMAs we're looking at now, which is the 200 SMA, and the 180 EMA. It's the same exact gap up. It goes running like you're going to get there, but what did it not do? If you've been paying attention and you're a smart person, right? You know that this didn't actually back up and check that creek. And not only that, but it establishes this really strong downtrend right here. Do you see that? And it just leaves it. So if you go back in time and you look at this, you've been like, oh, it's going, it's above the EMAs. Well, there's a lot of problems with this. One is AMC has never, ever done extremely well when it does not back up and check creeks. It just doesn't. They're very good about checking them on the other side of the court, right? The Bears are awesome about it. They always do their back test at some point. That's honestly what half this stuff even is. This is not bullish action. This is Bears backing up, checking things. So it's like, when you look at this, it's no surprise then that once this kind of hits a peak and there's some kind of bad news or whatever, as soon as that breaks, it's like meltdown mode. This is a big drop. You may not remember it, but this was a huge drop. Like this was like a 25 to 30% drop. It felt big, right? And I think at the time, I remember this being like a 40% run or something. It was really high. That's almost the same distance. I don't know why it looks so different, but I guess percentages are like that. That's a big move down. I mean, it's big. So maybe more like 30%. But notice that before it does that, it had established a trajectory. This trajectory motion is kind of building out this like widening in this case. This is just one of those like things where it's like, again, look at the big picture. What is missing? What has been hit? What is being accomplished here? What's being not accomplished, right? And ultimately, like, if you look at this big picture wise, you're like, yeah, there's a lot of things that were left on the table. Like this was kind of a weak backup right here. There was very little of a backup right here in July. So there's just a lot of reasons why this makes sense to me. And I'm like looking back on it now, even I'm like, yeah, there's that. There's a cross right there, cross trend right there. That one's probably even stronger because this more than likely represents a macro downtrend, right? And in retrospect, I think we know it does. You go back, you can look, you can see these things. But this particular angle that's established, that's not met. There's jump there, but it's super weak. There's a tiny little back test. This is like a gravity point for liquidity. This is where the real test is, you know? And ultimately, once the weak hands are shaken out, then look, it goes right back up to the top. Do a little SOS, right? A sign of strength off the top here. And yes, this turns distributive at the very tippy top. That's what happened back then. We know about the ape and all that stuff. And ultimately, it comes back to that same level right before ape. So this was a way of, again, offloading shares, reestablishing short positions, dropping it back down, resetting everything, okay? You're dumping it off. But they didn't shy away from actually meeting that target, is what I'm trying to get at. Just because it had this massive pullback. And the same thing applies here in a more bearish scenario in 2021. This is a little different because this hadn't actually broken out of like the major creeks yet. It had just approached it, but it's the same principle because ultimately, like, it's a test of liquidity high. You're building out a trajectory. Where are we going to go, right? Does this trajectory end up being kind of prophetic in the end? Yeah, it does. Not only is it prophetic, but it's used. This trend is used for distribution at the very top. Like, it's the first candle after the big squeeze. Okay. Not only that, but then later you can see that that similar trajectory is built out right into this whole move. We just use like the lower trajectory here. You can see it actually hits the top where that distribution happens. This ends up being the more used trend for the whole move, which is the second bottom here. So instead of using the top, you use that lower hit. This is just a distributive action. When we started coming up in making these big 100, 200% moves, I specifically said that I thought, it's possible that you could be entering into a kind of a bottoming phase here because it hit a new low. Historically, this creek is the same exact place that we are right now, way in the future. And this is why, even though it's not a popular opinion, and I get that, this is why I was like, we need to be thinking about whether or not it's possible that this is like a double up thrust to go check the top and it's going to do a final sell down. When you look at OBV, which is on balance volume from back in the day, the 2021, specifically the 2021 bottom, and I'll have to scale it correctly, this is the very moment that you think you're breaking out on balance volume, and then it drops horrendously, right? And we've mentioned this before because I'm like not really sure that this is the same as it is now, but there's a lot of huge similarities like between these two regions, between this on a micro level and then this on like a macro level is oddly very similar. But it would be entirely reasonable for someone to look at this and say, well, I think this whole thing is the bottom. Sure, this whole thing could be that bottom, and this is the big slide. Yeah, that's kind of where I was looking at it, 6 to 9 months ago. But it's also not, it's not out of the question that until you kind of prove it, that there could be a micro version of this. Like you can still have another iterative breakdown, basically, where you do basically the exact same thing, but you do it really low, and that would kind of satisfy this region. We're at a slide, but you should look at it from that point of view because remember here, like this is all upper level in terms of, hey, where are we going to go, right? All right, well, this is building out the upper half. When you look at the bottom half, it's not explored very much, right, until the end. It's like beginning and the end. And look at it on the angle that it's on in particular, and then look at the angle that we're on here in particular. Okay, and you can see that this particular head right here, this is the top. This is the same marker they use coming down. And ultimately, if you look at this as a distributive function, so yeah, it's going sideways and down. Yeah, it's painful. Yeah, maybe we don't need to be traveling this low. I don't know. There's a bunch of shoulda, woulda, coulda things. I don't know. I do know that this is certainly part of that angle, right? Like we're establishing on the way down a trend. You can see it before we get there. So some of this is horizontal liquidity. No one's going to sit here and say it's not. I'm not going to sit here and say that you shouldn't measure the chart that way. Of course not. But I'm also a trend person and I look at trends. And Wyckoffeans don't really look at trends that much. They just don't. So for them, like to say that this is some kind of a Wyckoffian build out on a trend, well, I don't know if that's very accurate. And I don't think it would be accurate because it's not a range. It's a trend. So when it's going down, it's not establishing liquidity floors. So I don't think it's wise to look at this and say, well, this is Wyckoff on a downward angle. No, it's not. And you can do Wyckoff here because it establishes a trend, which is logical. And it ends up being auto reaction, phase B top, spring, right? There's a big reaction, then spring, and then it goes. I don't think you can say the same thing necessarily here. This is a completely separate range from this other area in that regard. But from the point of view of a trend, I do think you can draw very strong comparisons. And I do think it works. You have some similarities in on balance volume, but the big thing for me is also like, yeah, I mean, I'm seeing the same kind of beats, right? Like, where are we traveling through here? Where are we kind of buying up liquidity? Because the plan is to establish a trend, follow that trend, and use the trend to help grab liquidity. So if you're looking at like, where can we pick up shares? Where can we find people to sell and buy, right? Where are people comfortable selling and buying this stock? That rubs people the wrong way too. People don't want to think that, well, people want shares down here. Nobody wants shares here. Yeah, they do. Like Adam Aaron bought shares down here, right? Like clearly they're trying to get those liquidity levels established where people are willing to trade and they're able to do more trading. The proof is in the volume. Oh, people like trading shares down here. There's a ton of volume. So when you look at these things, it's not so much that like this is a bad situation, more so as like, you know, when you start looking at every past scenario here and you look at the setup as it was, I'm not going to apologize for saying that I think, yeah, it's possible that it could come back down. It's possible that it could come back to $1. It's possible that it could come back to 85 cents. No, that doesn't mean that it's bearish. No, I don't suddenly think that it's not going to go up. In fact, it's kind of the opposite. It's like the way that these things break out was very unusual to me. Like, again, you didn't have a backup to this particular strong trend that was built here. There's nothing there. There's no backup. It just breaks out. Not only that, but then it goes straight to the next major creek. And these are the big ones, right? These are the big three from the tippy tops. We're talking about August to August, and we're talking about all-time high to August 2022. These are the big three. Like, there are no others that I think are more important in terms of creeks. There are certainly levels that are very strong, that are local, and there are certainly like parallel trends coming down. Like, I've got these big blue lines coming down that I do think matter. But in terms of like the macro creeks, those are the big three. We hit two of them and neither was back tested. That's a big problem. That is a huge problem for AMC. I drew this curve and I don't know why it's hitting this curve. This is going to sound a little bit incredible, but I drew this curve thinking that, you know, late July into August, it's possible we could be up there because of this. You see this first trend. There's also a second trend, which is markedly slower. That's this blue line. And then there's probably another one, if we really want to push it here, which is even slower. Okay. I see these as like the most likely candidates in terms of like timing for what we're likely going to see. So the charts that I had posted on Discord a couple times, one said maybe late July, August, but there was another one that, and I think there was several that said September seemed most likely, because if these trajectories are to be believed, then you would probably use either the middle or the longer one. You probably wouldn't use the fastest in most situations. That being said, is it over? Well, to be honest, like, again, we just talked about this like maybe 20 minutes ago, but it's been a minute, but it's like, have we reached where we need to reach? Well, yeah. I mean, if you look at this guy and you look at those triangulations that we talked about, like, yeah, technically this is it. Like, I think it already did it. I don't think that you can look at this down bottom. That's why I said that the 280 was like a sell zone for me, because you can't look at this and say, well, it didn't meet the required areas. Like, no, it did. It went all the way. Like, that's it for that second half. Done. All right. But so this is finished. Like, this backup right here, I think is finished at 280, which is, again, why I stressed, like, yeah, if it hits 280, I'm probably going to offload some shares and wait and buy back in. I bought at 2 already. I'll buy again if it goes down, but I'm not going to sit here and think, oh, it's definitely going to keep going, because that to me was ridiculous. You hit a, like, it could have happened, but it's like, look at the level that this is at on OBV and use your head. You know, I had people in Discord saying it ain't going back down, you know, like, it's just like, come on. At this point in AMC's history, y'all know better. Like, we all do. And I'm sorry, but this OBV is not meant to be like level to level, but there's something to be said about this. Look at the OBV on the 4-hour. Pay attention to it. It's so important. This just looks like a gigantic hook, first of all, on this trend. Second of all, this level has historically been a sell-off zone. So you're hitting double, maybe triple. I've got another mark right here. You're hitting double to triple resistance. And for Pete's sakes, folks, this is a gigantic divergence. This is not usually bullish. Okay, divergences are very like wishy-washy because sometimes you can read a divergence that isn't really there. Like it looks divergent and then all of a sudden it breaks to a new low and you're like, well, it's not divergent anymore. Sometimes they're very telling. Like this one was very telling. The fact that there was like a big bullish divergence right here, it could have been erased. It wasn't, thankfully, erased, but it does tell you a lot about what's going on with maybe some buying behind the scenes, some strength underlying that. But, you know, we also had, and this is what I told bears back here in March, and I came back to say, yeah, I think bears are way too overzealous here, is that, look, man, you had localized divergence building out. You have a massive creek. It's like building up underneath this big creek right here on RSI. You have a slowing OBV fall, right? It looks like it's going to do either a 50-50, in which case it drops really far, which doesn't seem very likely given the RSI and the volume back here, which was huge, or it's about to be ridiculously bullish divergent. And that's still there because this is a massive trade. But I do want to say this is like, if you look at that bullish divergence, where did it start? It started on this original bottom at 239. Is the divergence completed? I don't know if you can measure how far something's supposed to go on a bullish divergence. I don't think you can. I've looked it up before and I haven't found good answers for it. My thought is that no, you can't. But generally speaking, I usually think about where is that divergence starting, right? And are there trajectories coming off that divergence? Like what was originally kind of the build out? This is where the divergence started. Not surprisingly, it's the original bottom, so it's 239. Did it meet up at that divergence? Yes. Did you get a good trade out of this? I don't know. But overall, it was like up to 200%. I mean, you could have made a lot of money on this big, gigantic reaction, right? And it was a big reaction. In addition, it's like, well, where is that relative to the bottom, right? Well, if you look at the 50-50, this leads you up to about 630. Okay, assuming that it doesn't go lower again, which it could, but like say it didn't go lower again, it goes to 647 approximately, right off 239. Look at where that level is and go back on the chart and just look at where it is. And like you can see there's an established floor here. And ultimately my guess is that the liquidity there is pretty scarce. Like once you get to that point, I'm going to pull up the VRVP and we're going to see if it's the case, and it is. There's a huge liquidity gap right there from 577 to 640 is a very, 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 very low liquid zone right there. Not surprisingly, also coming off the top from like the June 2024, which would have been kind of like the final nail in the coffin for bulls, is ultimately like if you look at this big run and then the secondary reaction there, that's kind of it. And the rest of this is just the distribution, unfortunately. It doesn't pan into anything bigger. And that's where we have it. So like right now, like we're sitting on a place of like potential, big, again, capital P potential, where you have this huge OBV divergence. You've got this big volume influx here, right off this bottom. But typically, if AMC does not check levels, and again, and I think it checkboxed, by the way, again, this particular area. I'm not talking about the whole downtrend, but I think this particular area, done. Like, I don't see any need to go back up there on warrant of this. Like, it doesn't need to hit 319 or 320. That was a level that I had looked at, and I was like, it could, because it's important. It could check it, but it doesn't have to, because once it's breached the bottom, it's breached the bottom. Like, this sweep is done. So it's already swept above 239. It doesn't need to do it again. Maybe it will. You know, I don't know. But no, like it's finished. And it met those levels. It filled those gaps. It's creating new gaps, which is important. But now I'm like kind of like taking a step back and saying, okay, where have we seen this before? We've seen this before. We saw this in 2000 and we saw it really a lot of places, but specifically we saw it back here in 2022. Like after it had breached the top, it backs up really far and it hits these creeks that it just jumped over for some reason. Man, no real answer for that. It just did. Like bulls got zealous, it squeezed. Who knows? Maybe the plan again is to just do a sweep high and then a sweep low. But ultimately it comes back down and it goes back right back to where these, not only where the gaps were, but also where the trends were. So here we come to like the modern time. This is where things kind of like finish off for me today. And then I can look at things like trends or whatever. So right now, yeah, we're kind of testing the 180 EMA, but the SMA is pretty far down. It's at like 148. Okay. And you may think, well, it can't possibly go below that or else it won't run. That's not true. Yes, it's not a great thing to do it, but again, if you go back here and you look at that setup I was talking about, that's exactly what this did. This is like a 50-50 around them both. It's a liquidity sweep, so it pushes high, checks it, dips back down, shakes people out, right? Probably people, again, loads some shorts, does both. So it's not just against one side or the other. It's great. Bull trap, then a bear trap, and then into a big swing to the top. This particular setup, right, does a 50-50 around the EMAs. I don't, again, necessarily think that means that this is going to be bearish in the end or that it has to do that. But I do think it's reasonable to look at that as an example and say, well, what could happen here? Listen, I don't want it to go down super low. I don't. But if it were to go down super low and it hits something like, I'm kind of going right to the middle liquidity right there, which is at 160. If we did a big 50-50 swing around 160, this would end up down around 88 cents. And I've said before that I thought it was possible, and here's why I think it was possible. Because the level that, again, a lot of this stuff anchors on is around the 312 area to 318. And that specifically is based on what we know right now at 93 cents. It looks off. It looks like it's at 331. And I said before that, well, if you measure all the way down to 318 or 319, this actually hits 85 cents. So do I think it's possible that this could have a 50-50 to like 85 cents or something like that on this big swing if it comes back down? Yes. But here's the thing. If it does that, a big if, okay, I would then call it a potential for spring, because at that point you're looking at a double bottom region, essentially like a double dip into the low region, which is what happened back here. And if you look at the model of this is a massive upthrust, and then a slow kind of painful breakdown, right? And then it slides down again, creates one of those little ledges for us. Okay, we look at that, we can see like a lot of similarities on a macro level to what we're seeing here. It doesn't have to necessarily be that one-to-one, but it can be similar, right? So we have established a couple different liquidity levels. It's funny too, because like you can see them before, like that's what I would have guessed. You can see them before the VRVP. I would have guessed those two levels, and that's where they are. Because again, look at the little ledge that's created here. That's why I was using this as a demo earlier, because I was talking about how like they create these little ledges and then they back up to them. So if you look at these things, you can see that ledge is right where that gap is too. It's like they're not even like trying, right? Like they're giving you every single bit of information, but they want the FOMO to be such that people don't believe that it can go back. They want the FOMO to be such, the fear of missing out to be such that you believe that it's not going to possibly go back down there. But they've created these levels, like regardless, they're there. There's another gap right here, right off of this one. It's like these are the liquidity floors, like they're establishing them pretty tight. So I look at that, I'm like, yeah, all right. That's probably what I would have picked out as the two, minus the gaps. It seems logical. But there's also gaps here. I mean, yeah, there's a wick before, but this is a 4-hour candle gap going from one day to the next. This is your 138 gap. That's off the, again, gapping up off of the 200. And we talked about this a minute ago. I'm flipping around a little bit. It's really similar, right? We gapped up here, right there off the 200 and 100, right here. Boop. And you're like, oh, it's going. And then it drops all the way back down to where that trend was heading. Same exact thing. You had the breakout. You established a downtrend. There's a resistance marker. And then they break away from that on a gap. Potentially, too, if you count the fair value gap here, because it just kind of bleeds through it. And you have a problem of, all right, where are we going to go? You don't check the two creeks going up. You're blowing out the indicators. You've got divergence, bearish divergence on RSI. You're hitting a historically very bad bearish level for the 4 hour. You're going back to the cliff level at 280. This to me was like everything under the sun that could have told you this is probably going to have a nasty pullback, and it hasn't happened yet. And I don't know what people expect, but AMC can squeeze and has squeezed in like crazy ways. So I always leave that door open, but like this is one of those situations where this has been very broadcasted. Like this is very, very straightforward in my opinion. And if you missed it, well, maybe you don't do TA. Like maybe you don't think it's viable, but it was there. I don't know, I've been out of it for a little bit. I come back every now and then to kind of putz around and hopefully ease some people's minds about some stuff. And right now you might be like, I'm not happy because I'm down like 20-30%. Well, listen, it really ultimately depends on your position. If you have shares only, I would not personally, I can't tell you what to feel, but I would personally not be worried. If you're in like an options position that you bought into thinking this was going to go up in another week, yeah, you might be in deep water. Like I can't help you there. I'm sorry. I really am. I'm genuinely sorry. But at the same time, if you have an options position that's like farther out, yeah, you got to think about it. But I mean, ultimately, if it's like 2027 or if it's late in the year, I personally would not be super concerned. I may consider my, what I want to do with that position, whether I want to roll it or I want to average down or I just want to cut my losses and re-enter later. Like, that's fine. That's your choice. But overall, there's just not a lot here that made me think that this was going to be continuously bullish. So I was not surprised that they did an offering. The offering was like 130, which is a weird price. But then again, they left a gap down here at 138. Why does that happen? I don't know. There's another kind of micro gap right here at 128. So you look at that region, it's like, I don't know. This area has a lot of gaps. It's really bizarre how liquidity works. It's right beneath, the heavy liquidity floor. I don't know why they do what they do, but they do. That's the agreed upon level. That's where they're going to go. All right. When I look at this on the big picture, I've tried my best to imagine this in multiple ways. And one of the ways that I've been thinking about it is as a series of trends down. And so I talk a little bit about this on the Discord. I haven't talked about it much today, but this as a kind of a M cross walk down, and then this potentially as an M cross walk out, would need to have that backup and prove that it's going to like hold that level. And it never did. So again, it kind of breaks out, runs up to the top. And by the way, if you're doing it this way, you would have also been wise to the breakdown, because if you go to where that gap zone is right there, specifically way back here in November, again, is right at like 290. Like it's a ceiling. And again, like historically, this thing has not held water at all very well above these markers. Like it just hasn't. If you look carefully, and I think my other chart might be better for this. I don't know. I had one that had the marker on it and probably messed it up. This one also is like anytime it's been above this level, this is kind of another psychological level right here coming down. We have not held it up. So in order for us to break that, we have to see a strong backup. And this is where all of this stuff kind of comes together, because you might be thinking, well, at this point, it just looks like crap. Like this could just go right back down to here. Why would it stop? remember that on balance is possible that it drops really low again, but you have to remember that on balance has a massive, massive multi-year, right? And especially if this goes down into August, you're looking at August 2026. This is April 2024, right? That's a long term. That's a really long term, massive divergence. And for a bear to come around and say, yep, that's it, they're going to drop down here, it's going to reverse split, and then it's going to keep going down. Well, sure, it's possible. But let me tell you one thing that's very interesting to me is if you look at where this is in August, right? If you look at that intersection particularly, you can see it's at that 110 gap right here, which is right where earnings is approximated. Now, we don't know for a fact that's where earnings is going to be, but isn't it interesting that if you look at where that intersection is on this creek coming down, it is right on that gap zone, right where that liquidity marker is. And that's just above $1. If you were to go look at this, again, I don't want to like do too much fortune telling here or whatever, right? But if you go to look at this particular level from back in the day, I have to try to scale my screen a little bit so I can get it quite right, because I want to make sure it's wrong here. Let's see if I can get it off there. The last kind of major liquidity level is like right here. It's pretty low. And I don't know if you would have necessarily marked it off, but there's like one right there. That's where all the chop is. So that's where the shares are traded. There's another kind of weird gap zone right there. Okay, right before it has that big run up. This is very low. There's also a gap down bottom at like 12 that doesn't get filled. This was at the time would have been like, I don't know, 2 or something. I don't remember where it was exactly. 190s. I think it was 292 in the end where the low was. So this is probably like 3 something, but this is the area that ultimately is the final sweep, right? And again, much like what we see in this setup here where you get this early advancement and then it bleeds really far down, the slingshot is humongous, right? And the trajectories that are building that are sending it really far. And you get a similar kind of pattern here. Like it goes below maybe what you would want comfortably, but notice like the trajectory is still there to the upside. That's the trajectory. I'm using like where the nitty gritty, the chop is at. It's still there. So I look at it and I'm like, listen, this is probably, as best as I can tell, a very similar setup. I don't know for a fact it's going to go low, okay? It's very possible, although it would be some kind of a very strong situation, I guess, for AMC. It's possible that, I don't know, this wouldn't look good for me. It looked like a head and shoulder. But sure, it's possible this goes back up. But I'm going to forewarn you that even if this happens, I'm not going to just flip back to being bullish. Because just like what we showed before, that typically, this kind of double motion right here, if it breaks down, it usually has a distribution at the end. So once the trend breaks, I'm making a little doodle in the corner. Like once the trend breaks, there's usually another distribution cycle. There's kind of like, this is meant to kind of make you think it could go back up. And oftentimes it's really just back testing the trend. Especially if like this is already kind of bearish. So we may see some kind of like secondary upthrust in a week or so going into July that makes us think this is going to go back up. And you're going to have people in your community or whatever, wherever you kind of watch stuff going, it's definitely going to go, man. Well, we don't know that, for first of all. Second of all, there's a lot of time here. If they want to offload shares, they really want to slow it down, they can. Operators, I mean, people who have a lot of money. There's a lot of space here. So this bottom trend that I drew is an approximation trend. I didn't lock it in, but there's a lot of space here. You know, you've got from now as the crow flies till August 3rd. I mean, that's a whole month of sideways possible. That's a lot. That's a lot of time. Given that this region wasn't traded that much, I could certainly see it as a possibility that we do a little bit of a head and shoulder motion. And if you look at it carefully, you can kind of tell what I mean by that. So let's say, for example, this is downward, But let's say, for example, it did do a shoulder motion here. Um, the second shoulder might be quite large. This one goes almost all the way back to the top, perhaps, if it does this. You could see something similar to that, where it even goes back up near 250 or 240, right? This is kind of my bigger concern. I think I mentioned this once in the Discord, was like there could be a kind of a weak push back up to the 240 region, because that, again, it's possible, which happens frequently. Like we were talking about back here, like this is still a backup. Like there's two backups here. After it drops, it backs up twice. It doesn't ever get back to that area, but it comes back up close enough to the floor. And the same thing applies here. Like once it backs up, it tries to go back up, but it doesn't quite fill the gap. It's really normal. They're just trying to like bait you into buying back in. It's usually like a hook motion. I would not be surprised if we see some kind of a reaction here off the sell-off that kind of brings it back up. And my guess is this blue line that I've got, it's a weird one, but I'm actually pretty confident in it. Because again, this is where the trend was established as bullish again back in May, at the very last days of May, from the bottom. I think this is a viable trend, is what I'm trying to say. So I wouldn't be surprised if, by July 20th or whatever, maybe it takes more time, maybe it takes less time, I don't know. But I wouldn't be surprised if it moves back into this range and still rejects. So I would have to see some really specific things for this to go. And honestly, none of this right here looks good to me. This wouldn't even look great. It would have to have kind of a quick drop, in my opinion, maybe to 160. And then if it did that and it reacted strongly and came back above 139, that's the moment that I'm like, okay. If it found the support above, 239. If it found the support above 240, that's kind of like the zone for me. You can see that green area right here. This is the big resistance. It need to come back above there. And ultimately, at the end of the day, you might even be waiting until 3. Well, that's too far. That's 100% or whatever away. Sorry, I don't make the numbers, but that's where it is. It's super far away to prove that this is actually bullish again. And I'm not saying it's not bullish now. I'm saying that we're in a particular kind of a mode of backup. So what would be better, and I actually think would be more bullish, this would be kind of a waste of time. It might give you a temporary relief if you're somebody that's holding an option or something. It's certainly a possibility, that you get something like that. But what would make me a little bit more bullish would be if we just go ahead and kind of get on with it, Frankly, leaving this gap doesn't really bother me, because this could end up being like a 50-50 swing. So if we were to come back down and start building out a range here, I would be pretty comfortable with that. Something like this going into going into August of 2026. This to me would be fine. It looks bullish, or it looks bearish because it looks like a head and shoulder, but I think it could be a situation, one of two things, right? A situation where you're either going to get that shallow S curve at the end here, or if it does break down as a head and shoulder might, it'd probably be more like this if it did that, then you'd end up with a slide. But I think this is where you might end up getting a really nice spring. So the low levels that I'm looking at, specifically that 130 area, definitely a lot going on right here. I think it's going to create and establish some resistances and supports. I think that if you can manage a break here, then what we're probably going to see is a drive back to the upside. I know it looks like I'm just kind of randomly doing stuff, but I'm really not. What I'm looking at here is this is a potential bearish situation where you have a hook. It's very simple. So if it goes back up there, I'm not going to be fooled into thinking that it's definitely going to run, especially if it gets caught beneath 239. It's still a possibility it drops. Second option here is that it just continues the drop, but then I'm looking at 130s. Then the final option is really a divergence from those two. It's two different choices. One is, I don't know what happens on earnings, but it certainly would be in that region, right? One is that we go ahead and get a drop, and that's pretty, we'll just call it benign. And that one would maybe be what we call an LPS. Yeah, it leaves a gap on the table at 112, but ultimately it finds support, it breaks out, it runs back up. It's possible that this could be another fake out. We'd have to be careful because, again, we've got this lower trend. But just like the other one, we'd be smart and we'd wait for that 270 to sort of confirm it. If this were to happen, you would probably see some kind of a whipsaw here. And I don't think that this gives us necessarily the best case scenario, to be honest, in terms of height. But it does get you back up. You can see from 125 up to about that. I'm going to just use the halfway point right here at like 250-ish. You can see that leads you to $5, which I think our gap at 520 would be beckoning. You know, and there's some wiggle room here, but basically it's a perfect 50-50 up to 520. And that's genuinely what I think we would see. And I said earlier, unfortunately, I think this might act as kind of a ceiling. You know, we've got 6 something above and some other levels, but this is a pretty massive creek. This is like your all-time creek. This goes from all-time high to the top of August. There's not a higher mark to be made on the chart that I'm working on, which is a logarithmic chart. That's very much in line with what we see here at, if you go to the 520 gap right there, that's where the closing candle was. I'm not going to argue about gaps right now. If you want to argue about gaps, do it in your own time. It's at 520. You can see that intersection is right there in September, which is the original call out that I had on Discord was like, I think it'll be more likely September. And it has to do with the triangulations. It's also possible that even in the midst of that, that this actually still bleeds down quite a bit more. I'm looking at it now. I'm kind of wondering if, I mean, this is inconsequential in some ways because it's like it could blow past that as in like a sweep and go up to like 6 something. It wouldn't be a big deal. But I do wonder because now I'm looking at this, I'm like, oh, well, you know, there's different ways to measure this out. And I do wonder if like that 50% up to 520, if you measure from the top of the gap here, which is right there at 276, it actually only comes down to 145, which is quite high. That's right there. That's kind of interesting. That could be a possibility. Maybe it doesn't even go this low. So this could set up a little higher. That would be like us struggling with the EMAs and then breaking out. That works. So that's a possibility, I guess. Set up a little bit higher. But you go to the bottom of the gap, which is very low. And to nobody's surprise, right? Hopefully. To nobody's surprise at all, it's right where we're anticipating. That's where the bottom of the gap is from 520 down. That's your 50-50, right? That goes right down to 89 cents, which is slightly below the new bottom. So here you have a very strong possibility that this could be, you know, at play. This would be a huge move, by the way. I'm pretty sure this would be massive, like a 480% move. This is gigantic. And the weird thing about that is like, it may seem like, oh, well, you know, none of that is quite where I want it to be because look, you've got these intersections that are a little higher. But I also was just saying like, it's like, basically it's inconsequential because the 520 gap is just a triangulation. And sometimes what we find on triangulations is that they're met like as an alternative move, like as a coming down move. So like the counter move here, right, was to come back down, and like that's where it's met. And that triangulation is met really neatly right there and right there, but it's like there's squiggle, right? And it went early. So if you had looked at this and said, well, I think it's definitely going to hit this part at this time, well, you're right. It did get there, but there was a lot of stuff that happened before. And the same thing happens with the rest of the noise in some of the other charts as well. So I don't look at it as like it has to hit that part at that time exactly. That's silly. Sometimes it's even like a pivot. It's not even like a high. It's actually a low, which is a bummer. But I would look at it like, okay, if that's the case, maybe that's what we're seeing here. Like these guys are acting as pivots, right? Like this is where you're hitting the lows, which would make sense, which is down bottom going into this earnings. So instead of it being a peak zone right there, which is exactly where the earnings is. So I'm using white line to white line. You can see it brackets the earnings quite nicely. Quite nicely right there. It's like directly between the two. That intersection at like 590s up to 6, that's where that wave seems to intersect. But let's say, for example, that that's the low. Well, then this would make sense. You just have a massive squeeze after. And I do think it'd be somewhat inconsequential to see this kind of push up to 640 or 650, because ultimately, like, do I think it's going to stay there? Well, that's a whole other question, right? Maybe, maybe not. But you would definitely be in a situation where this particular peak, right, now acts as a huge retracement, like a pullback. So that's another thing that we see is like, if I were to go back up, and I remember doing this measurement in 2022 on the first March breakout. If you were to go back up and look at like a peak, it may be that, yeah, the 50% was the triangulation. But it could also be that, yeah, maybe this hits $9, you know? Maybe this goes crazy and hits $9, and you might think that's going to the moon. That is a huge move, and it is. But the reality is quite humbling, I suppose. It's like, sure, that could happen. That's off this top, but then a 50% retracement actually goes all the way back down to $3. What? Well, yeah, because if you start at 89 cents and you go all the way up to $9 or $10, that 50% pulls you back down to 288. That's not exactly like the moon, is it? Well, we wouldn't do that. We wouldn't. Well, we did that before. This was a humongous move. This was a 900% move. And the backup here comes all the way back down, right, below 50%. It goes all the way back to the creek. And one of the things I've noted for some time, although I haven't really thought about it too often, and I think about it every now and then, is like this particular motion right here, it almost perfectly marks off a 50%, but it's not the 50% that you would think. Like it marks off like the more realistic 50%. See how like that's the top of that range? So it's like a halfway point. It's almost like a measurement tool, right? Of like this full move. But ultimately like the move itself goes really far, right? Beyond it. So it's kind of interesting to think about that as like a halfway point. Is it possible that we see something like that? Well, take a look for yourself, right? Like that blue line right here, I'll make it mark off to the top. That's where the gap is here as well, by the way. So it's like they use this moving forward, right? See right there, that's where the gap is. They use it moving forward, even though this angle doesn't really necessarily make sense to me. Like I don't know where it came from, except for the bottom. And then they use it again continuously here, right? This is like a weakness, I suppose, of a test. Let's see where that is. Let's see where that is locally, right? Like where does that go? Well, it's not exactly pleasant to hear it, right? It doesn't go to $9. That's kind of a bummer. But what it does do is it goes up to 686. So we may be a little bit overzealous saying, oh, it's going to go to 9. That's a 900% move. That's pretty similar, right, to this 900% move in terms of distance traveled. Yeah, it's 948%. That's humongous. This is a 999%. So 940 really is like $9.30. But again, look at where I'm measuring from, right? I'm measuring from not quite below the bottom. Like I'm not measuring from down here at 75 cents. So if we were to really go down to 75 cents, which is really far, would that hit that intersection? Yep. Does that look like a triangulation right there of this as well? Yep. Where does it go? $7. You know, in the end, what we get is more information. And to me, it's like, I don't look at this and think of this as bearish at all. I know it seems weird, but I actually think this is like the best possible time to be paying attention to AMC. Because even though this is crappy and you don't like that rug pull and you don't like being down 20%, 25% or whatever, and then another 10%, the reality is like these opportunities are only set up every now and then. So if it plays out right, you're in a really strong position to capitalize on it. You really are, you know? I can't see the future. I don't know for a fact it's going to run in September. You know, there's a possibility that these intersections that we're looking at all of them could be representative of kind of like a basin right here. And I think you have to keep that in mind as well. It's like on the macro, yeah, like we crossed this guy earlier, and we hit it. Did we back up to this one, for example? Like, have we backed up to this yet? No, we haven't. And actually, that looks quite accurate to me, because you can see that that's the top from May. I know I'm adding a lot of lines here, but like, look at where that is in relationship to all the stuff that we're doing right now. Look at where that is on earnings right here, where that gap is at 112 and where that creek is coming down that we definitely did not backtest. These are all the things I'm like, yep, that makes sense. You know, maybe we get a spring that's a sweep low. Maybe we get a sweep below the floor. It could go pretty low. I think 85 cents makes sense to me. It just does. Because of, again, that middle, I think that 318 could be marking a giant center mark. I really do. Of sorts on this S curve. And if it is, then it makes more sense for it to hit 85 cents than 90 whatever, 93 cents. I'm not going to hold my breath about it. I don't care that much. If it hits something like 73 cents, fine. It could take longer for this to happen. Well, maybe we're going to get there, but it's going to be on a reverse split. I don't know. Okay. I don't know. But I will say that on the whole, what normally happens with this, and what I'm going to do is I'm going to start getting rid of some of these extra markers, I think, because we don't need them all on the chart. But on the whole, I think what we want to see is we want to see this creek back up. I don't necessarily think that the level complexity here is much to, I don't know. I just don't really think it's that big of a deal. Like, I could definitely see this stopping at like 6 something in the future. That's a sensible level for a few different reasons, but I'm like specifically looking back at this drop zone, just thinking about how like we never back tested that either. We didn't back test a lot of stuff from 6 up to 14. There were a few things that were checked, but we only ever came back up to like 588. And I don't count this as like one big, that's fine for fair value gap. It works, but in terms of like back testing or trading, it just doesn't mean anything. This didn't really trade anything. It just went through it very, very briefly. So that doesn't count in my book as a highly likely check on levels. Like liquidity test is what I'm trying to say. This is just a sweep. And it's a good sweep, but it's not like, all it did was accomplish like these top marks, like backing. I don't really think about everything in between. That doesn't really count. Anytime you think about liquidity testing and like actually going back and checking levels, you should think about a little bit of chop. Like if it's just a back test to fill a gap, fine. The gap's filled, that it's done. But if you're thinking about like, oh, did it actually go back and check these levels again? No. Like it never went back, the price action never went back to check trading off of like, for example, there's a heavy check, I guess, right after this on 730 because you can see the sideways trading here. So there's a lot of shares traded here. There's a lot of shares traded here. But then, again, notably, there's a huge liquidity gap here. It's just like never traded. It just left it open. So those are things where I'm like, yeah, that's one. There's another zone right here. That's another one that's left open. That's the 850 to 9. That's the level that I got wrong when we were thinking it might come back up. These are the two marks that I would use liquidity-wise. And currently they make sense. Like number-wise, they make sense for going back up. This particular setup in this particular way here, I wouldn't worry too much about the actual sell down itself. I think the sell down itself was warranted, very, very warranted. At this point, what I would probably do is I would look at these trajectories, I would consider them. So one of them intersects right here. I'm going to actually make these a lot lighter because I don't think they're that important. And that one might be even a little off. This one might be more important now because this really represents the second peak. This originally, the one I did here was a cross of this particular sell down, which is more of like a 50% reduction. And that has to do with wave theory. I don't know. My own mathematical wave theory is a bit odd. I used to do it all the time on the stream. I'm not going to do that right now, but it has to do with like a 50% cross. So basically, like, trajections can often be made around 50%. This would have been fairly accurate, although you'd have to split the difference, but you can see it's right between the two. And that just has wave theory written all over it, but it only hit this one. So these two are potential trajectory markers. And again, I had drawn this, which is a curve, and I was like, well, if it follows this one, it hits up here. This is the major intersection. But there's a lot of intersections going on from about July 21st until maybe August 6th. So I'm not really confident that any one of those is particularly right. I do think bulls were kind of aiming that way, but they lost it here. You can see they've dropped it. So this now becomes a slingshot of sorts if it's going to be bullish again. There's a potential, again, that we could get this kind of backup struggle for a bit, and it could still not go. So we have to keep that in mind. But then in addition to that, I would just kind of look at this with the EMAs. We've got the 50-50 possibility down from the peak. That's just a standardized S-curve. We just did the measurement. That actually works quite well to about 85 cents. That would work well as a middle point or an end point for this as an actual spring, okay? But if that happens, you're probably going to get a second trajectory. So like no matter what, you're probably going to get some kind of a pushback here. You're not going to just necessarily go straight down. That's pretty unusual. So at some point, they're going to mark off something. They haven't done it yet, meaning like bulls or whatever, shorts covering, haven't taken any profits. There's no backup yet. Once that happens, that's where I think we're going to find the most value, and it hasn't happened yet. So again, I'm not trying to beat around the bush. I just genuinely don't think it's happened yet. So it hasn't. So once we get that backup, whether it's here or here, I think we're going to have a much stronger idea of like a timeline. And if it's early, we should be able to, I think we're going to be able to capitalize this again, maybe going into September, October of this year. Most of my calls are for January of 2027 because I got in the money stuff and I don't really want to play guesswork on this, not knowing, because I figured if it ran here, I'd be fine. But if it didn't, I didn't want to be in a bad situation. So I've only been in shares and in the money calls for the most part. So I'm not super concerned for my own well-being at this point because I'm like, whatever, you know, if it takes a while, it takes a while. But I do think this particular setup with the on-balance volume being what it is still bullish. And that being said, you know, this on-balance volume isn't really in a horrible spot just yet. There's another chart that I have here. And this one's pretty much the same thing. I mean, you can see I've already got the lines marked off here. I'm already looking at different ideas. I like to kind of use different charts for different things. So this one looks really empty because I was just playing with certain ideas about this downward trajectory and what that trend might look like, yada, yada, yada. These are the same two big creeks, and then this, of course, being the same marker down. Similar idea, right? There's some kind of a backup. If it rejects, maybe it rejects here, maybe it rejects higher. I don't know yet. This is a little different because this is actually a trajectory built off of these guys as opposed to bottoms here. So it's a little different. But, you know, I'm looking at this and it's like, that's the on balance with a moving average. And it's also kind of trying right now to see if it can hold it. It wouldn't surprise me if this also does some kind of like either a reaction very, very soon. You can see we're getting really close on the 4 hour. We're getting very close to the bottom here for a full sell down, and then also on the on balance. So I would not be surprised if within the next week or so we see a decently strong reaction. Again, very short-term reaction, but off of these marks to kind of come back up. Probably just, again, being oversold, just push back out before trying to actually go into a floor, perhaps. That's normal for AMC. And then on balance volume, maybe you see something very similar where, again, it's kind of like a 50-50 kind of deal. Well, that doesn't make me feel good. Again, this particular setup, look at it on the whole, right? And imagine this as a repetition of pattern. And you can see why that's significant. This particular guy as a repetition of pattern is very similar to the overarching build out here. It just is. The way in which it's traveling with those massive upward movements. So if you saw the reaction once, if you saw the reaction twice, it's probably going to happen again. And it's happened dozens of times, right? And this is a good one, again, to go backwards and look at the original run up, because I think it's very helpful to see that. Like, this has a similar kind of build out. You have this race up. I'm using the EMAs now. You have this race up. It's testing low each time. Here it finally looks like it's going to take off, and then it dumps like way below. That's, again, the moving average. So what? It's over, right? Bears will come out and say it's going to reverse split. Yada, yada, yada. It makes a new low. Everybody's upset. It goes to 85 cents or something. We love you, but we also hate you, kind of stuff with Booksy, because it's like, why did you, it's like you made it happen or something. Well, I don't know. First of all, it may not go down that low. It could stop at 110. But you also have this sense of like, yeah, okay, so what? Like, this has happened before. And in many ways, like, this would be a great setup, because this is such a steep reaction, that V shape, that if we get the slingshot, who cares? Like, be ready, to use it. So this particular guy right here, this looks extremely similar, I think, to what we're seeing presently. Even on the micro right now, like, it's a testing level. So I'm not particularly concerned. I do think that timing is going to be tricky, and I don't think necessarily going to be able to guess all of it. Do I worry about continued dilution? Yeah, a little bit. There's parts of this that I will never, ever, ever be able to guess or control. And I think the idea of like a dilution was, in my mind, was kind of just there, because I was like, well, they've done it multiple times, and if we need a pullback and we're not getting it, I don't know why it's getting so overextended, like as if we need an excuse, right, to pull back. So that was really more just me spitballing. I don't know if they're going to keep doing it. And if they kept doing it, would this change things? Possibly, yeah. If I'm going to be, this is kind of me being more bullish about it, but if I'm going to be as bearish as I possibly can, I would probably look at this and think about just worst case scenario is that this doesn't slingshot. Again, I think the macro disagrees with that right now. I think there's a strong case for it, because you can imagine looking at this in a couple months, if there's a bullish divergence here and then another bullish divergence here, I mean, it's going to be massive potential. What I mean is, like, if this drops to a new low and the on balance kind of maintains, as it goes down, and it ends up being like, oh, this is new low and this is bullish divergent, you're talking about a super sweet bullish setup, right? I don't know if it's necessarily going to happen, but point being is, like, I don't see this particular setup as bearish until it's bearish, right? But if it were, then what would more than likely happen is we would see like a prolonged distribution, kind of like this. And it's sort of the only way that I can describe it, because there's not really a better way to describe that. You'd probably end up having very similar kind of looking cattier setup, I suppose. I don't know. Where this comes down and trades across, but it takes a really long time. It has some similarities to what we drew, but it would be really weak. Like, you'd get really crappy weaknesses with like LSPYs everywhere. You'd probably end up with like some pretty massive upthrusts, but they don't go anywhere kind of thing. And I guess this could be long-term still bullish, but it's basically like a similar setup to what we had here, but on like a macro. And then what that does is it creates a systematic kind of problem of like, well, this could end up being down to like 60 cents, right? Because if we continually avoid, that's the other thing, I'm sorry, I forgot to mention, would be like if we continually float, that's not a good thing. You might think it's a good thing, but it's not a good thing. So if we were to continue to float and avoid going down to check these marks, you should be very, very like hyper vigilant, right? Because this like loftiness where they're like constantly like bringing it up and holding it high, there's gonna be a lot of people who are gonna go out and say it's bullish because it's holding up so well. But really, like when this has happened and we've avoided going low, it's almost always because they're distributing. Like they're getting shares on the opposite side before they take it to break through a level. So be very mindful of floatiness. Like if it avoids going to these two creeks specifically for a long time, I would be extremely bearish about that. Because this could end up being a situation where, yeah, you end up at like 60 cents, you know, in January, which is literally the opposite again, which is exactly what happened here, right? Fool me once, right? So if you see something similar to that, I can't give you like financial advice per se, but I would definitely tell you like be cautious. It may even look like this where it's trying to like make you think it's going to hold support on that creek, but man, until it breaks out here and like goes back above that 239 and all that jazz, like I would be extremely skeptical of this kind of a move. So just be aware that this would be the more likely bearish scenario. Right now, I think 85 to 88 cents looks good. That's my call out. Some people are going to have different call outs. That's fine. But I would be very, very aware of like what a bearish distribution looks like. It will have up thrusts that make you think it's going. It floats. It doesn't go back and check. This is bearish, not bullish. Okay, a bullish setup will not do that. It will go ahead and go down and it will hurt, but that's okay because it will ultimately be better in the long run if it goes down and checks those creeks in a timely manner. It means that it's setting up and checking the boxes. Like if it goes down and checks all these creeks within the next few months, couple months, that's really good. Like that's very, very good. If it floats and kind of hovers here, I'm very concerned. So if I were to like boil this down, I guess to like one or two motions, maybe make it easier for you guys to see it on the chart. Let me do that. This is like a bearish motion. This is like a bullish motion. Like if I had to pick, like just make it super simple, Booksy, give it to me straight. Like that's it. Okay, bullish motion, go down, check the creeks, get there before too long, actually do the back tests, do the work. Bearish is it lingers, it floats, you get these reactions that are sharp. It avoids going down and checking creeks. It avoids going down and filling the gaps. I'm not a fan of that. I'm not saying it's not possible in some world that they do that to somehow trick the shorts or some nonsense. People always come up with some crazy ideas. But I'm saying like if it does that, that's very similar to what we saw here where they kind of avoided bottoms, you know? And instead of getting a nice spring, at the end, you just got to sell down. And really, it was because of these really high, unfortunately, right? These very high trading zones where they're just trading off like the tops of the zone, not the bottom. So better for us to see it go low, not waste our time, and get down there, especially before, you know, earnings. That'd be great. That'd be really, really good. I know that I think July 17th is the Odyssey movie. That's going to be huge. that's kind of one of those things where, again, I'm like, man, it would not surprise me if we saw some kind of massive rally. Like it establishes like a little bit of a floor, and then July 17th, you get this pump. That would not surprise me, right? Again, like, would there be a situation, Booksy, for those of you that are holding your breath? I cannot give you financial advice. I can't tell you what to do. I would not personally wait to find out if this happens. I would just go ahead and plan accordingly, long term. That's me. That's what I would be doing. The chances are very slim, though it is, I suppose, a possibility. And I don't like even bringing it up, but the chances are very slim, though I suppose it's a possibility, that this runs up into earnings in August. I'm very hesitant to even talk about this because I think that people always look at these situations and they think this is the one because it's the one I like the most. Let me tell you right now, I think both of these other situations, but specifically I'm hoping this one, I think those two are the most likely. If I'm going to apply probability to it, or that this goes up and then dumps, like makes you think it's going to go and then dumps. And there's reasons for that have to do with the way that AMC, I've already done all the charts today. I already showed you guys the examples. The way that AMC is traded off of these EMAs and so on and so forth. But someone out there is going to say it. I'm going to go ahead and say it before they say it. Someone's going to say, yeah, but what if it just finds support and it ignores all these backups? Couldn't it just run? And to that, I'm going to answer the question with, again, you're looking at this. Like, it has to get back above the 239. So you can imagine it all you want. You can consider the possibility all you want. But unless this has that advancement and it backs up and lands on 239, maybe it happens because of the Christopher Nolan movie. Like, I'm doubtful, but maybe it happens because of that. Maybe it happens because of the 45-day window, right? There's all kinds of theories about, well, they're not going to dilute again for 45 days and so on and so forth. Okay, whatever, man. At this point, no, it hasn't broken the final bottom. Like, it's possible that this comes low and it doesn't break down. But this is kind of like the outside, in my brain, this is like the crazy, not conspiracy theory, but this is kind of like the crazy out there, squeeze theory. Like, you would basically hit some kind of a low here, and then you would recapture or test the 200. You'd have probably like a buyback in around 180, and both of these creeks would be checked this time, and then it would just melt up, right? And if that's that, that's that. I think it's done. Like, that's the end of it, so on, so forth. And I had like one scenario like that. I think I drew it on a chart a few days ago. I think I drew it like this. I said, well, I think it could do like this. It's already gone lower than what I expected. But that was also based on a 5-wave sequence. And so this is where Elliott wave might come into it. I don't do a lot of Elliott wave on stream, but I had done a 5-wave sequence because I was like, well, technically, like, wave 3 is bigger, or it's longer than wave 1, although if you just count the breakout, it's not. Like, this isn't longer than 1. But if you count the full wave from the bottom, I guess it could be a 5-wave. I don't think that's how Elliott wave works. I think you're supposed to count it from like where it breaks out. But yeah, I mean, technically that's 100%. This second one is like 130%. So I was saying, like, it could be possible that you could have a 5th wave, and the 5th wave measures did go out to like 620 or something. So you went pretty far. The only problem with that right now is that from a technical standpoint, like, this broke beneath 193, so, or 194. So it's like it already went below the top of 1. So you can't assume Elliott wave anymore because of that. Like, maybe it happens, you get a 5th wave, but even then, it's like 4th wave usually breaks down. So if this had chopped sideways, this is kind of what I was thinking. It was like, well, maybe it could chop sideways for a time and then eventually, go. You get a 5th wave here, and that's another way to measure it. But at this point, I think once it breaks that top, you're supposed to just ditch it. So I don't think it's valid anymore as an Elliott wave. I think that's all there is to it. Like, there's no hoop. You can jump through like mental hoops about it, but well, there's something more. I don't know. I don't know Elliott wave that well, but I do know that one of the rules is that it can't go below. It's usually not more than a 50% retrace, which I think this is at this point. Yeah. And that just so happens to also be the top. So it's like it couldn't go below like 195 or whatever it was. 190. But it's already happened. So yeah. This is like kind of I don't like this scenario because I think there's a lot of wishful thinking in this based on what's already happened. I think it's a possibility, but I also think that it's a stretch. So I would leave it at that. Who knows, One other piece of evidence that might support this is this guy back here. So I didn't do a lot of this kind of mirroring stuff today, but I suppose like one piece of evidence that could work in favor of that theory is like this being over, maybe this bouncing here and like finding support, which I already talked about. But the other would be that it's actually it's just mirroring out, I guess, a support like an M cross. I don't particularly love that, but so if you take this guy and you look at kind of the action in and the action out, this particular motion here as the action out, and I know there's a second bounce there like in the middle, it actually does, and I think it's a fair enough comparison to make. There's a decent similarity there because you can see like when this like in reverse, you can see that check right there. So I don't think it's an impossible thing. I don't like it very much, I guess is what I'm trying to say. I don't really have an easy way to explain that. Yeah, we'd already be there because it's hitting like 170s or something. So it didn't quite make it to that top. More like the gap. I made it to like the gap. It didn't quite get up to the top. So in order for this to break out, I guess that makes sense because this actually had this actually had support there. So instead of using the top, using the support. So this would have been in reverse like this. So if you were looking at this thinking, well, I think it's going to do this or that. Well, maybe. I guess that's the one way you could have it support that theory, which is I think maybe it is a wave 3 somehow, even though it's already broken it. But maybe it breaks through this particular uptrend as a fourth wave. Hard to say. Comes to like 175, which is kind of where we're at. Maybe walks down a little more, and then it breaks out into a fifth wave and heads up to whatever it may be, 5 something. Maybe testing this floor, which is kind of like the 14 that I guess we had thought about before. So this is like the final scenario of, oh, it's actually like a fifth wave that's pretty good, pretty healthy or strong. I just don't know how you can do that with Elliott right now because it already broke the rule. So, but yeah, maybe as a mirror. What I do like about this is that it is appropriately like backing to the creek. So like, even though it's lost here, like at some point it would have to hold support on this creek, which is supported by this idea that like, yeah, it's going to check this level right here. Well, it's a back test. At least it's checking out that zone. And then similarly, if you go up to the top and you look at where that would need to land here, I don't think it's right on the creek, but hey, it's pretty close. At least it's doing some kind of a support above the creek. And the same would have to be true right here. So these are kind of like hyper bullish scenarios that I'm not really convinced of just yet. I mean, unless the operator just really wants to throw off bears, because that would be who's affected the most, is like to a large degree bears who are expecting it to come back down, because that's what it's done like every time. Like they're expecting it to come back to 110, and instead they pull the rug. So they're like loading up early to make a profit, but instead they're pulled. That's a possibility. I just don't like those kind of games. Like I don't like to try to guess about that. So I have no idea in that case what's going on exactly. So this would be something that's a maybe, but I think that that should be like, at least in my head, I'm imagining it as like a third scenario. Like I don't see it as the predominant two, or the most likely. Yeah, maybe that's like a squeeze on earnings kind of scenario. It could be a little different, I guess, because they have a yeah, it's weird that gap right there, it lines up really well with like the split here. So really all these interactions are kind of valid. Yeah, and then that top. Yeah, so like this could end up being one of those things where it kind of walks out, like fills the gap there, and then creates like an SOS and then goes. I wonder what the so that's the 50-50. But that kind of leads back into the other scenario of like, no, we need to go back and check this, right? This is already like looking, it's hard to say because like this already looks like I could be correct. It's the same thing, but in a different situation, I guess. It's like from down low to here. That does seem right as well. Yeah, I don't know. I don't really want to guess about that anymore. I think this is dumb. It's kind of a waste of time. The key would be that no matter what happens, it's like, that's why I was like, when it goes up to 180, I'll probably sell, but some of my shares so that I can get them back. And I have already, but it's like in some of my option contracts, get that back. But then when it goes up again, or when it comes down here, like I'm buying from, I said I was going to buy from 180 to $2 because that's where I see the first major support zone. But then lower than that, I definitely would be buying from 110 to 130. I don't know about down low at 85. I mean, it gets there, great. But to me, it's like those were the two areas that I'm looking at as possible lows. Everything else is whatever. So, yep. Yeah, I wonder about this. This is really difficult to see. That's earnings, huh? So that's the equivalent of that little marker we made earlier. Yeah. It could be higher because I'm not really sure. The drop down's right here. So maybe the last green candle. So this kind of suggests like this is a directive of like, I don't know why I'm doing this now. I should have done it earlier when it was really relevant. But it's kind of like directional motion. So if it does go low, I think this again, 85-cent pocket, man. I'm telling you. Something about that level, it keeps popping up. The quarterly MACD. Look at the curl of quarterly sentiment. Yeah. And those indicators, I don't use MACD as often, but those indicators are great, like long-term trends. Just remember, like, there's a divergence possible. So it could be that that's going up or starting to really turn up as this is sort of selling down. Those indicators get controlled, so you have to remember that to some degree, that there might be some strong divergences for a time, especially on like a quarterly chart, since that doesn't update except every like quarter, right? So it's kind of like it'll progressively move, but it doesn't, what I mean is not set in stone till that update period's over. It's like watching a candle on the 3-minute, right? It's like until the 3 minutes are up, the candle can fluctuate and change. The indicators do that, and they use those rolling. Some of them are what they call cumulative, right? So they're constantly like adding numbers. Those ones are really interesting to monitor when you're trying to watch divergence, because they can be affected greatly by a lot of the things like dilution and whatnot, since they rely on past data, to my knowledge. I mean, I've used them here and there. So what I'm saying is, like, I do agree if it's curling up that's bullish, but I also wonder, like, it could probably turn up for a long time based on the fact that it's a longer length for measurement. So you could see that turning up all the way through here, and then eventually it just goes. But even if this is coming down, I also want you to, maybe what you could do is go back and look at this area, see how it looked. Because I bet you a lot of those indicators were kind of turning, but like probably wouldn't have been that affected by some downside. Because all of this is happening within a long period of time, few quarters, right? But like it's ultimately just kind of flatlining. So normally like an indicator coming through here would just be doing like this, you know? Like it may be flatlining out because this is just technically just up, down, up, down, up, down. And if you're thinking about points on a curve, it's kind of like, it's like an average of these points, you know, for each quarter, looking at the, or where the earnings reports are, right? So it's kind of like, where do you think that curve would be if it's spliced between them? It really would just be kind of narrowing, you know? And I think given that data, it's helpful, but I don't find it to be, it's not like an easy one to use for prediction because it wouldn't give you a lot of timing, I suppose. Most things don't, but that's just life. But yeah. I still think that this marker here, to some degree, this guy right here is probably the most important. I can't stress that one enough. I really do think it's probably the most critical, and we're getting into a place where we're starting to see the outcome of that. Like that bleed up is so strong. So I'm looking at this as an opportunity and not a bearish turn. I really am. I would not worry too much about the broader market. GameStop, doing GameStop things. I'm a little concerned with GameStop's really, really recent price action because I like this a lot as a bullish possibility. I like this widening. It almost looked like a diamond, which is great, but then it kind of fell apart here. So yeah, like right here, this ending, I'm not trying to start a whole new thing, but this sort of fell down. It went right back underneath, which I don't like. So it was actually at a place where it looked like it was breaking out of a diamond structure. Diamond structures are okay. This particular diamond structure could have been a bottom, but you know, even if it was a bottom, it's like it wouldn't have gone that high. It would have gone to like $24.19, which Historically, 24 has been our sticky zone. So it's kind of like, would that have made sense here? Yeah, I mean, look at the drop zone right there. I stress these things because they're really important. But it's like, yeah, there you go. That's the shift. But it's such a minor one because it's like that didn't even, it broke out so low. So on the one hand, I was like, yeah, that's good. That's a good bottom. It looks a lot like, to some degree, this guy, I guess. But like specifically for GME, it actually looked a lot like the 2021 setup here. I really liked it because of this. Because this reminded me of that diamond structure as well. And this is often a very good pattern for breakouts, but it didn't really hold it, which is kind of a bummer. It's almost like inverted, right? Because you can see the topping action there. Check high, go to the middle, check low. When I look at this, I'm usually looking at that more so than what come before it, because it's like this is a bottom. Unfortunately, I don't think current price action, I mean, it's so small, but I don't think it quite agreed because it looks like it went below. Let me double check. It's very close. I don't think it went below. It's very close though to that bottom. So yeah, unfortunately, it has a lot of weakness in it. So it could be a diamond middle, like a halfway point. It's the same measurement, but instead it breaks down. So since this did go above, I'd be hesitant. It'd have to come right back out. This is what this orange thing was about. I was thinking, oh, it could break out. It looks a little late, but I actually drew that on the chart a little bit ago. It kind of already did that. It head faked a little bit. So if it doesn't come back above 2170s, this is long-winded. But there's a strong possibility that that fake out could cause some serious problems. You could end up with like a 50-50 down. And it hits 1839, which is pretty dang close to what I thought anyways. So maybe that's not that off. It seems too low, but if you look back, it's actually not that low. It really isn't. If you go back in time, you look at that 18 level, that's very similar to what we did on the macro for GME. See that? So you see how it's like between these two right here? And I'm going to tell you what I mean when I say macro, but it's kind of between these like bottoms right there. Back to this level, where that gap zone is. It looks very similar to what we saw here, which is if you go back and you look at when this broke out, it has this huge backup, right? And look at where this goes. Make sure I get this right, because it's actually slightly above. If you look at where this bottom goes here on the sell down, it goes like 990. And if you go back, you can see that that's like a strong, like almost a double bottom, but not quite, right? It comes back to this lower level. So it's very, very similar to the way this set up before it did this iteration. So it wouldn't be a Booksy stream if I didn't talk about repeating iterations. And that to me, I don't love it because I kind of like the way this looks here. I really liked that this was like jumping that creek and kind of like consolidating. And I like that that diamond was building out. But you know, it also kind of has this head and shoulder vibe on this side. You kind of see that shoulder, head, shoulder. So it wouldn't surprise me. And then it also hasn't, not that I think it definitely needs to hit this again, because technically I already hit it once. It would not surprise me if this dropped. This would be like a sweep, If it drops suddenly and hit that 1850s area, it's very similar. And I think you could see it do a bit of a squeezy motion right after that and kind of head up to, I'm still guessing like 45. I really do think it's likely going to go there. I have mixed feelings about this one because originally I had thought this was the middle, but over time I'm starting to think more and more. And I had this thought early on because I looked at this and thought that looked very similar. It was too steep, had some problems with this, and it already kind of accomplished the backup, which is weird, but this one never does. So it doesn't ever come back up to that middle, not really. So it's like a possible precursor, like this, what I mean, after it leaves. So it's like there's a question mark in my head about it, but I do think it's possible this is the guy. And things get a little dicey from there because you'd have to use some unknown variable. Like, I don't know what it is. Originally, when I looked at this, I used this triangulation from the drop zone. But the only drop zone we have from this sell-off, there's like two of them. One of them is way down low. It's like way up here at 28, which is very low. That is where it is. And then the other one is this kind of secondary action that we had. There's a huge sell down right there. You can see the volume on it. So it's possible, and there's even like some kind of a crazy, not gaps, but wick action right there. I think it's very possible that's the triangulation, which is why it's one of the ones I have drawn out. It's a bit odd, is what I'm trying to say. I'm not sure. So there's one possibility that's very low, unfortunately, and that's like 28 to maybe to 30. And then the other one I still think is at like 45. If you look at the downward creek here, like as the crow flies, if this went down to 18 something, and again, it's just a sweep. I'm not saying it's bearish. But if it goes down there and it's spraying out like it does here, I think it's possible this could run all the way up to 42 plus. If it actually goes to 45, it's above the creek now, or 48. So this is some question marks in my head about it. I wonder, because this did have that push up, and it went really high in extended hours, and then it opened lower. And I would wonder if we'd see something like that, where this actually goes up really high, and then it opens like at 42 or something like that. Unfortunately, as far as iterations go, there's a ton of space here underneath that creek. So if it did it, it could do it again. If it didn't break out, it could do it again. There's a lot of space here. So I would definitely consider that a possibility, that you get some kind of like a sideways action here for a time. Who knows? That one's a bit tricky. I would say that on the whole, though, I think there's a decent chance this could come up and hit pretty soon. So this would play into a couple different scenarios if it drops suddenly. If it dropped really suddenly, I would probably look at maybe even see if AMC is ready for it, early. So if this were to go down rapidly and suddenly it's down here at like 1850 in mid-July, that could change my mind a little bit about what we see here on AMC, depending on how this sets up, right? So the other thing you have to consider is, if what we're thinking is, and this is the last thing I'm going to say today, I don't have to get off, I'm talking too much. If we're thinking that this is somehow like a repeat, there was one instance that's very important to talk about, which is this guy. So like when this, again, like we could be in a situation where I won't be able to do it. I'm sorry. I can't. I got other stuff to do. I understand that, but there's nothing I can do, man. I'm sorry. I have to go. I got other things I got to get done. So I have other jobs and commitments. I'm gonna finish on this, and I have to get going. And I apologize, but yeah, I don't know what to tell you, man. You got to get on our server or something. You can ask questions on there. Yeah, at a glance, maybe. This is the only thing I would say about this is like the thought process back here might have been much the same, that you could have had this kind of buy up and run up. And this was in December of 2020. So again, it's kind of like go back in time, look at that setup. Where was this at in December of 2020? Well, by October and August of this year, it already run up. You know, we look at December, this is right before the squeeze. This isn't like SOS mode. So at the time, I'm just saying this because like sometimes, you know, we might think something is going to be 1-to-1. But it's not necessarily 1-to-1, right? So like this particular setup, yeah, you know, goes up, creates this cross up. It's doing this in December, right? It's already running up. So you could imagine something similar here if you're going to get some kind of giant squeeze, right? Like just because this maybe runs up here and it's already kind of doing this fun, fanciful cross up here going into September, and you get some kind of a squeeze in September, you're really looking at something very similar. Like the moment this is running potentially in July, yeah, AMC you might assume would be doing the same thing like back here, but it doesn't. It goes down for its final drop. So when I look at that, come on, I'm kind of like, even then I'm like, yeah, I don't know. That doesn't really mean much to me. Like it's certainly a possibility, but I could totally see them like taking turns on this. And right in July when we think it's, you know, GME starts going, it's going hard, it's going up. AMC does the opposite. It finally like tanks and goes down to its low, and it waits to the last second in like September, you know, potentially really far away, right? I'm putting it in August, but I had said September. I think it's possible. You can wait to the last possible second and then just suddenly squeeze, kind of like the 2020 21, and it would not be inconsistent with something like this happening on GME, assuming that GME did run really hard. It doesn't have to be like this. It could be a lot more benign. I'm just making a point that like just because GME runs in July, it could be like this. You know what I mean? A little more chill and doesn't actually go all the way up that far. But just because GME runs in July does not mean that AMC can't drop into a spring. They're not neck and neck all the time, as we've seen. So I wouldn't be surprised if GameStop has like a really nice build out going into late summer and kind of leaves AMC in the dust for a bit while AMC dumps. And then suddenly, like, you know, they're really moving together. Maybe by late fall. That to me would make some sense. So yeah, so I wouldn't hold my breath about this running early. I think that you're more likely going to see, personally, I think we're more likely going to see this drop down low to the bottom again at some point. I think anything right now should be met with a grain of salt, like a potential reaction here, but not necessarily going to run. You got to be really cautious about that. Hey, if it runs, I'm happy. I'm just saying, like, I'm set for it. I'm just saying I don't think it's as likely. So, see, it's 1 o'clock. All right, I'm gonna give you the moment here, and then I gotta get going. This is a daily chart. Yeah, I mean, there's a little bit of a wind up here. I'm a little concerned because it hasn't made the leap yet. There's like a first little kind of minor jump here right there. So I'm a little concerned. See how it's leaving this like open possibility that it could still be divergent, but still have a drop. So it's like a 1, 2, 3, 4. So even though that looks divergent at a glance, I'm a little concerned. That looks like a cat ear setup. So I would say that now I'm looking at this level where it kind of took off from, and see how it's retreating really fast in this channel. And I'm looking at these original kind of marks when it came in. This is where it opened, and then it ricochets, and this is where it ultimately drops from, right here. That's the setup right there. So like a couple things. So it hasn't checked this level. It looks like it could be about to do it, but then I look at this and I'm like, this is pretty typical, like for a cat ear chart, because you would have it come above on the second ear like that. So part of me I'm just not sure. Like, I don't know if I would trade this at all unless it really breaks out. And to that end, it's a pretty straightforward chart. You could just mark it up and wait. Like, wait from there. I don't foresee it necessarily breaking out though. So this bothers me. This trajectory was established as like double bottom of sorts. All right, so yeah, it's not a bad chart. It's just there's two distinct possibilities. So one is that you get and I don't really like it because it's weakness. This is like a second drop. So this looks like an auto reaction. This actually looks like an auto reaction with a lower low. But even here, this is like another auto reaction, and then it has a second top, and then it makes a lower low. So where is it going? Yeah, it didn't test that on the way out. Right there. See that model? There's the high. It's the same thing we see here. See this push up, and then it creates this like trend, and then it's going above it. But you can see the same thing here as well. Push up, and it's like going back up, but then it's like going back above it. So it's the same setup on the big picture. So it's tough. On the one hand, it is forming some kind of a trading zone above as it's walking down. On the other hand, it definitely looks very cat ear-like. Normally when I look at those, I'm looking at this pattern and I'm watching the very end. If it drops first and it recaptures, that's really bullish. Because usually that means that it's actually a spring if you don't know the difference. But the thing is like this also is usually accompanied by like a more statistically likely spring where you have like a phase B top, you know, or good second bottom that's strong. When this is weaker, and especially if it's coming up like this, if it's weaker, I don't know. I think flags are a real thing in the market, but my point is that like when you're at this particular point right here, you know, it might be prudent to say, well, I think it's going to go, but the reality is that even if this was bullish, you may still get a pretty nasty sweep. Like even if this is ultimately like a bull flag, we don't know for a fact it's going to break there. So you just can't tell. I can see this having a pretty substantial drop And if that maintains while making a lower low, if that maintains a divergence, then I think it's strong. So the best case scenario for me anyways, with the most clarity, is this dropping to like 26 or 28 on the daily and then breaking out here. To me, that's the strongest, like that. That's the strongest situation for the read, because you're going to get a really good entry. Probably hits $1 is what it looks like. So walking down to $1 and checking it, you might get a really strong entry, and then, yeah. I'm a little nervous because this is very steep and looks like it wants to go below $1. Like, as the crow flies right now, you can see if it dropped, it'd be like 75 cents. So that to me is a pretty straightforward setup. Maybe a bit of a triangle here, so you can follow that. What I'd be worried about is this, that it goes up first, check here, and it fails to advance. So maybe it's like an intersection at 379, which is a big run, and then it just dumps. It's over at that point. Like, I don't think it would ever have to come back. That very distributive. It's almost better to not get that and just go ahead and get the drop first, because I think if it drops first, there's a stronger chance that it's going to reverse like this. Then you'll get a nice bounce, probably come back up and retest that same zone, right? But you'd be doing it with a little more strength and you get a bigger move out of it. Looks like right there, liquidity shelf that's been used throughout right here. Yeah. And then the non-booksy answer, where I'm not thinking about everybody trying to gun for you. If you're just looking at it and you think, well, I don't think it's going to flush at all. Well, the non-booksy answer is just using a, pretty standard measurement for this wedge, which isn't very high. Usually it's like a 6-1 or 6-2 break of this, which isn't the biggest move, but so you go from 0 to the 6-2, which is right there. And that, again, it's like the exact same thing. It still goes to right there. That's the Bulkowski measure, which is it's a 62% break. So, best case scenario, I think you're looking at 360s right here. That's where the liquidity shelf is. I don't think it backed up to it very well. Like, you can see it dropped from it and never went back to check it. And it does happen to kind of correlate to this 180-day moving average, I think is what it is. So, yeah, I don't know what this is, but I'm very doubtful if it's this low. Look at the amount of value that's been lost over time. I mean, it's had some pretty massive swings, but to me, it's like, what's preventing this from going any lower? Nothing. So there's nothing here that in my brain tells me this is going to go lower, or this couldn't go lower. I would definitely be mindful of that. Like, this is your best case scenario for like a decent payout. And the thing is like, this Bulkowski measure only really validates itself on a simple breakout with support. So like, it'd have to break out and just do it all at one go. No big throwbacks, nothing. That would be your best case scenario, I guess. The rest of these, I think of them as best case if it drops first, because I think about, well, after that, this would be really low. So it's a buying opportunity. And then on the whole, I think it could present itself as a good opportunity if it has a decent reaction. But I'd also be mindful of the fact that, you know, it's kind of staying away from this marker. It's getting close to it. I'm looking back over time. It's like occasionally it's pushed up to it. You know, so you could be in one of these scenarios where you get this nasty drop, but then it kind of comes back up to it. But for the most part, this is a huge amount of time, years of just not interacting with it. So in this case, it's like, well, if it didn't, even if it did go above it, you know, you could be interacting with that marker as it comes across here. Maybe it evens out a little, but levels out a little bit. But like, it could be a while. So I would be cautious. Like, this makes it seem like it's definitely going to happen right there. I'd still think, yeah, it's possible this could be like really nasty, and then have to take some time to like rebuild. So if you don't want to get trapped in something, I would be really cautious with this one. I would wait for this. And if this didn't happen, then I probably wouldn't bother until it got low to like $1. If you're shorting it, that's different. But if you're just bullish on it and you want to trade an upside swing, I think, yeah, I think it'd be wise to wait for the 220 breakout, not try to like guess. Yeah, I mean, these could be one and the same. I don't know. This kind of move. I'm not saying it has to go down, but certainly a possibility because of this. This is an SOW. It's called an SOW. It's a sign of weakness. So it hit multiple signs of weakness. 1, 2, 3, 4. This would be very different if on this particular reaction, if this had come down and been a little higher. I think you might have a better case. I'd still be talking about these early ones, but you'd probably have a better case for a little more strength. Or, big or if this had come up, gone down, and this had come higher, then we would be talking a different story. This stayed low below these two, so if this had come a little bit higher, then we would be talking about whether or not this could be like a W bottom, like where it's going to land back on top of this with some strength. That's what we were talking about with GME the other day. Or that's what we were talking about with GME a little bit ago. But it didn't do that, so it didn't come any higher. It stayed low, so it just made lower lows, lower highs. So it's kind of a bear flag, and right now I don't think that, when I say bear flag, I don't think it necessarily breaks bullish. I just think it's currently stuck in like a sideways trend. There's a high likelihood that $1's on the table based on this setup. It makes sense due to a number of things, but you know, if it broke out, you could get a good run from like 2 something up to 340. I think it would go test this. All right, I gotta go. I'm not saying, yeah, 170, I don't know. But, you know, someone's going to look at this and say, like, this is the final sell down. But I can't see these things and kind of ignore them. So it's hard for me to look at this and suggest to you that this is, like, the reaction with the phase B top. I just don't think it is. There's too much going on here. Like, they were already establishing a level back here. So to me, like, this is the auto reaction, and it went lower, and then it has a really weak second reaction. So I don't find that to be particularly bullish. I can't say for sure with anything in the market, but I can say that on the whole, like, I like this. I like the way it's building out. I just wouldn't put it past a final rug pull here, and then I don't know why it wouldn't go ahead and try to get down bottom. Maybe you know, maybe one way to look at it is like quarters. Like, you can divide this into quarters That would be like your one, maybe like 140, but it'd still be lower. I don't know. I just look at this stock and I'm thinking like you're playing a reaction, so you really want to just kind of buy low, sell high kind of thing. I don't think there's much else to it. It's hard to predict. And these are falling angles, like these are falling chop that still fall. There's a lot of that here. You see that? It's almost like a wedge and then it still falls. It's kind of the same thing. It sort of looks like it's starting to hold up. It looks like it's jumping a creek and then it just dumps. So that's why I'm not convinced that this is necessarily going to be different. If the stock had a history of that, showing that as, yeah, it's effective, then so be it. Yeah, I think it's aiming for $1, personally. Are you going to look at GME at all this stream? I already did. It wasn't a long time, but I already looked at it. Honestly, this isn't that different. I mean, this is kind of what I thought a while back, that we could end up with a slide here if it failed. This is what this is like a cat ear kind of setup. It didn't jump where it needed to jump. It didn't hold up. It never went to like 27, 28, which was the buy level here. Just didn't do it. I don't think that's necessarily a bad thing. It is kind of boiling down to pressure and what's available. And I genuinely think, just like AMC, there's a lot here that is quite positive. But because of this breakout, it's like a false bottom almost. If it double bottoms, fine, but I'm really concerned about the possibility of just kind of a bleed down to 19s, maybe as low as 18 something. So 1930s, that was something I found a long time ago. I don't remember why 1930, but I remember that number. And then even lower than that, like 1850. And these don't particularly faze me. They look a lot like the macro iteration where we had that big backup to 9. Like we went way back down to 9, which is very close to that backup level before reacting. So it would be really similar to what we see here, where we went all the way to like 1780. We never revisited it, and then all of a sudden we drop near there, but slightly above, and then move out. But this doesn't necessarily mean that, you know, like I said, I like this setup at first. I was like, well, it looks pretty good. But this doesn't necessarily mean that it can't drop again. And it also is a diamond, and diamond structures tend to work pretty well even on GME. So if it breaks down from the diamond, that's a low target. Nothing in the market's guaranteed, of course, but if you're using statistics and probability, it's a likely drop. So going all the way back down here, that again, I think is a buying opportunity, because I think genuinely that presents itself as a macro setup. If that reverses here, you're going to get a really strong reversal, because this is like a giant wedge, right? You get a really strong reversal. If it goes low before it breaks out, that's a very, very strong. It's typically stronger than if it just breaks out. So going low first is better. It's like a sweep. And I've already talked about it a little bit, but this particular setup, it's kind of a triangle, but it's like, you know, usually if you break out here, you're going to hit the 6.2. And so if it broke out, let's say in mid-July or late August, or mid-August, something like that, late July, August, you know, you're looking at this already at 45, which is a large part of the price targeting. If you look at analyst price target, they're talking about 45s. So because of the value of recent earnings and all that stuff, like, yeah, they're making weird decisions and different ideas with eBay, but add on to that a little bit of extra from this, and you can see it push up to like near 50, which breaks you over the creek. That's why I was saying, like, it could be a situation, yeah, where maybe it doesn't go any farther than that, but I wouldn't actually be super surprised if it did squeeze to like $100 or something a share. It's a strange thing to say. Um, Maybe even revisiting all-time highs or something similar, like up here. Sounds weird, but then again, it's like we went to like 80 something or like $80 in extended hours here. So after all of this kind of consolidation, I think we could make it. I think it's a possibility we make it up there. I don't know about the eBay thing, you know, but I do know that there's a decent chance. I'm not too concerned about it. I'm aiming for like 45s. If it goes beyond that, great. So, all right, I really do have to stop now. But appreciate you guys hanging out. Weird kind of a off day for me, but it's okay. Um, I will hopefully check in with y'all very soon and get some good action here. I think if this can come into a place where these guys are in a good spot to kind of revisit for a big move, whether that's down low or kind of where it's at. Same with GME. I think I'll come back on. So, all right. Y'all have a good one.